Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Brianna Boleski, and we have Serge Berger on the line, head trader and investment strategist at the Steady Trader. Serge, how you doing this morning?
I'm good. Good morning, guys.
So you covered that Apple short there ahead of your target. Just a little bit of gut feeling on that one. Were you able to maybe nibble a little bit on the long side, or are you looking to reshort it?
I actually haven't bought back into it. It just kind of went a little too quick. I'm full disclosure, actually a little bit busy on that morning when it started bouncing on the fifth, and I would have liked to buy it, but I just didn't get around to it.
You hate getting cute like that. If you have a
hmm
short and then you cover the short and then you're like, oh, I'm gonna try. I don't know how many times I've tried that, and then watch it continue lower. It's a tough thing to do. Moving on here, general markets. I mean, what happened? Here we are, 30 points, higher above the low from Friday in the S&P. 2062 was the low. You had July 28th low at 2061 to 50. Just hung out there, gave you all kinds of time, and now we're right back up towards 2100. What are you looking at in the major indexes?
Well, I think to answer your question, what happened? I think nothing happened. We this morning we're just seeing a continuation of what's been the year-to-date, choppy frolicking, and until we get a little bit more clarity, whether it's going to be September, December, or next year, because that's essentially what a lot of this is about. I'm just not quite sure we're ready to move in either direction. We're going to see a short squeeze here this morning, which is to be expected after Fisher did his thing, which I didn't even know he had a South African accent until I listened to his show this morning. But so it's just continuation of what's going on. What I am looking at though is a lot of bigger picture stuff. So for example, if you look at the S&P 500 and you pull up like a monthly chart going back a whole bunch of years, you'll see that what's actually quite important here is a 10-month simple moving average. So the 10-month simple moving average is actually held for a very long time. Even last October, we had that V-shaped reversal on a monthly closing basis. That moving average held. It again held last week. Of course, it's more important to find out what it's going to be like at the end of the month if we're going to be able to hold above that at the end of the month. So a very simple line, right? But one that I think is fairly interesting to look at, and it's actually better than a 200-day moving average, which a lot of people like to focus on.
Okay, all right. Asked our other guest here about the commodity markets and time to buy. They said, looking at some of these oil prices. Our last guest said, "Yeah, good luck trying to catch a falling knife here. Is crude or gold or beans or any of the commodities getting your attention?"
Not really. I think once they're ready to bounce, they'll give us an actual signal, from price. And we've had a lot of divergences from momentum perspective, but I don't think you want to really try this too much. I've been on the horn. I was on BNN the other talking about Apache and something like Chesapeake and trying to see if we can do something there. But I'm still failing to see any real flush out selling that gets me interested on the long side, particularly as the commodity itself continues to slide.
Okay. And I think I saw something maybe last week that you wrote on Walmart. I know we've been talking about it for a long time.
Yeah.
I know you've taken a couple stabs at it, and just trying to work your way into a trade here. Do you have a level? Do you have something that you're focusing on here? What's your
Yeah,
thesis?
I mean, we actually, it was funny, the day after we spoke, I suppose, or a couple days after, the stock actually made a move. Um, oh no, I think it was the day we spoke because we were on like Wednesday last week, right?
Mm-hmm.
So it was on that day, and it just about got to my entry point. We set 73.50, I think is what I was looking for a daily closing base. I wrote about it the next day, and I said, listen, you can get a hold above that level for a couple of hours. You can try to on a long side, of course. It didn't hold above there, and now it's back lower. So not very interesting anymore. I want to see. It's just what it is. It's remember we talked about Alcoa earlier this year. That continues to be a thorn in my eye, and it just it's the same thing in all these things, and there's no real momentum or no real exhaustion selling for that matter to really get long.
Okay. Do you ever look at the auto stocks at all?
Sure,
GM and Ford here.
Sure.
GM got punished off some good numbers. Ford had some good numbers too. Now they've taken back under $15 here. Give us thoughts on the big autos.
I think Ford is a little bit stuck in the in to some extent. I actually talked about this for a couple of funds last week, and we were talking about sort of the correlation between Ford and some of the commodity prices. And there's somewhat of an odd relationship where you like 70% of the time you get some sort of inverse correlation, and the other 30% you don't. So you can't really draw much of a conclusion at this point. But the problem for Ford to me is it's just stuck in an absolute range. I see nothing to do here. I don't know if there's options, but
No.
Ford probably doesn't have any crazy implied volatility. I would prefer GM if it can get say above Friday's high or something for a trade. And other than that, I think the better momentum name in any of these is Tesla, which we've talked about that in the past. I'm not quite sure it's an auto stock, but it's somewhat in that space.
Yeah, it is. It's coming off hard off the earnings here, down at the 240 level. But it looks like we're starting to form a little bit of support here. Enough for you to maybe take a stab in it?
Yeah, potentially. I mean, again, I'd like to see a little bit more of an exhaustion selling bottom. I just don't see it. All these things we just went through. You want to see some sort of real puking, for lack of a better term, and we're just not seeing it. So why, to the point of your other guests, why try to step ahead of it?
Okay. All right. And just moving on here, earnings season kind of winding down. I mean, not the greatest earnings season overall, but boy, oh boy, market just doesn't care.
No, it doesn't care, and I think what we're seeing, and this is something we talked about the last couple of times I was on, we continue to see chasing in the things that have a believable growth story. Things like a Facebook, things like a Netflix. They continue to somehow be able to hold up. I think support is getting less and less on those stocks as well, but it's there. And you're seeing just the commodity sectors and a lot more legs being taken out. I think more and more. I think the biotech stuff's getting thinner as well. On the biotech sector, on the IBB, there's an interesting moving average there, namely the what did I use? A 20-week simple moving average. I think's been holding religiously and been a wonderful thing to focus on. So if anyone's interested in biotech, which I'm sure I'm not the only one, the IBB 20-week moving average is a really good one to focus around.
Okay, we'll keep an eye on that one. Okay, Serge, we need to get your expert opinion here on a stock. Are you ready?
Yeah, but give it to me.
AQXP.
Oh boy, yeah, that's
It's halted now. It is halted. It is now. This was a $2 stock on Thursday, on Friday's open, and now it is over $32. I am so glad I'm not trading this, Surge, because I would be losing so much money. It is now halted. I mean, what do you think? I mean, is this just excess in the markets? I mean, can you put any kind of rational explanation into this move? I mean, of course, it's a biotech.
Yeah, I mean, I was just gonna say. So I think that's right off the bat. That's something you have to realize. Also, I mean, just FYI, the stock was a. Oh, sorry, I typed in AQXP.
Yep.
I'm getting different. That's interesting. I'm getting totally different prices on different. Anyway,
It's at 32.19. It was just
yeah,
halted.
I see it that now. Yeah, it's just what I'm saying is it really kind of bumped lower there in July and just kind of did a U-turn. Anyway, the point I would say this. So we did a bit of a study of this last month, and essentially what we're finding is a lot more stocks having sort of irrational moves, especially if they're in a hot sector. So, like we talk about Netflix. I mean, that of course is more of a believable growth story than whatever this is, right? But the point is we're seeing more volatility in some names that have to be chased higher. And I think that is from a timing perspective, when we consider where we are and all the other things we've talked about, all the legs that have been taken out of this market, it's just one additional concern that I'm having.
Okay.
For the broader take. I don't know. I mean, what do you have
I don't. I mean, to me, I would have lost so much money trading this thing from the short
Yeah,
side because
sure.
when I looked at the news, I mean, to me, they had bad news on. I'm gonna have to do some more investigation into this because back on July 9th, the stock went from 6 to 2, and it was because of the same drug, aka ACQ at 125 or whatever. So I'm gonna have to do a little research in it. We'll see what happens. Comes off the halt. Well, thanks for joining us again, Serge Berger, head trader and investment strategist at the Steady Trader. We'll talk to you again next week, Serge.
Thanks, guys. Have a good week.